folks. Welcome to the market technical analysis by InTheMoneyStocks.com for December 21st, 2007. Well, today was Friday, and tomorrow is the shortened week based on Christmas. And again, to repeat what I've mentioned in the previous videos, we have a half day on Monday with the markets closing at 1 p.m. East Coast time. And Tuesday the markets are closed. Wednesday, Thursday, Friday, normal trading hours. But you have to be aware that next week will be extremely light volume unless there's some major news story that develops. But for the most part, if normal trade occurs, it will be very light volume. So be aware of that, folks. And let's get right into some chart action here. Now, today we continue to see the rally. And what I love about it, not only was it what we called in the videos and on the website, and hopefully a few people took advantage of it, but now you have a different setting because you've had the Nasdaq closing up 51 points, and I'm going to go over the indexes here quickly. The Nasdaq, as I said, closed up about 51, up 2%. The Dow up 205 points, or 1.5%, and the S&P up 1.67%, or 24 points higher. Now, we're getting into some interesting areas because we're coming up to resistance levels, and I'm going to show you this. So as I did call for this rally going into the holiday of Christmas and New Year's, I am going to adjust it now that we've had a large portion of the rally. Just in the last 2 days, we've almost done 80 points higher on the Nasdaq. So having said that, you've taken a lot of the rally out of the rally now. All right. So it's important to realize that and to say to yourself, okay, well, we've already rallied this much, about 80 points, or that's about 3+% on the Nasdaq, close to 4%, and now maybe it's time to readjust our outlook accordingly. And in doing so, I am going to say that I do think we have a positive bias left in this market. So maybe a slight trend toward the upside, but at the same time, I'm adjusting things to basically more of a flat market next week. Now, I think there will be some movement up and down in the market, but I think when you look back on the week, possibly next week, you will see generally a flat to sideways, maybe slightly up market, but at the same time, we are coming into these resistance points, and it's important to realize that. So let's take a look right away. Let me get out my trend tools here, and let's start to look. And again, as I always say, folks, this is just my personal opinion based off what I see in the charts. Always talk to your financial advisor to get the real picture. These are just for entertainment purposes and should never be construed as investment advice. Now, the Nasdaq, right here, look at this move up over the last 4 days, really. You had this test of the low, and you guys should know by now that when you have a tail like that and you close near the upside of that tail, that is very bullish. All right? And this is what I meant by this. We moved on this candle right here, this big red one right here. We moved below the 200 moving average, and I said that day, after in the video, I said, okay, guys, well, that's all fine and dandy, but the question becomes, do we confirm that move down? And those of you that don't know or are new to the videos, understand that to confirm that move down, you need to close the day after below. All right, if you're looking at a daily chart, you have to look at the daily close. Just like if you're looking at an intraday 10-minute or 60-minute chart, you have to look at the 10-minute close to be officially confirmed. Alright, so here's the day after. You had that spike down, and for a while it looked like we were going to confirm that move, but by the end of the day, they rescued us back and brought us right underneath that 200 moving average. We did not confirm that move down. The day after, and actually in this video right here when we moved up here, right underneath this 200, I said, okay guys, now tomorrow, and meaning this day, we look to see if we move above that 200, or do we move back down, and do we close above the 200? And the next day, we closed a point above 2,600, which was actually interesting, very interesting from the perspective of that you now are above 2,600, above the 200 moving average. Once you got above, then all the rest is history, and we moved up right here. Okay, so if you want to actually play things accordingly, look at the move off the low based on our rally call here. All right, you have this low here on the Nasdaq, and let me move my chart back. It just went over a little bit, but you basically have this low right here. And you can stretch that over here, and it's about 25 and change. So 25 and change. Now we're back to 26.91. So from this low right here, you had well over 100 points to the upside. Okay, so that's amazing in itself, in my opinion. You had about a 120-point move on the Nasdaq based off the rally call we were expecting going into this weekend and into next week, and that looks to be final there. So that's a phenomenal move, no doubt about it. Now let's talk about today. Today we saw a dramatic move up. Research in Motion had great news. Merrill Lynch came out. It looks like they might have an investment coming in from Singapore, a large money investment to save them or help them deal with their subprime and credit worries. In addition, you had the Fed doing their second auction today. I believe $20 billion went out. By the way, the Fed is just flooding this market with money. I understand it's doing it to save some of these issues, but man, oh man, you got to figure that with the inflation data coming out being hotter than expected, eventually something's got to give. And I do want to impress upon everyone watching this video that today we saw a little hotter inflation numbers in a few different indexes, or a few different telling numbers that came out at 8:30, as well as on Wednesday, I believe it came out, or Thursday. There was some other data that was very a little hotter than people wanted to see. And again, that's not surprising, because when you create more money, it means more money's out there. It means prices can go up in adjustment and so forth, and that's how inflation, begins to rear its ugly head. Now on the Nasdaq today, folks, this is what I want to show you here. Look at this line, all right? And this is key. Not only are we pushing against the 50 moving average here, and this is the 50, this purplish line right here, and I drew a line across because I want to put into effect and put into your minds the top here coincides with the top over here. Now, it's not really a good head and shoulders. Many of you guys might think, well, it's a good head and shoulders because you have this pattern here, you have the head here, all right, and moving down here, and then you have a shoulder here. But usually what you want to see on a good head and shoulders is this shoulder over here, this shoulder right here has to be a little higher than this one. Then it creates a trend line and you look for the breakdown. So because we went lower here than this shoulder here, it's not a good head and shoulders pattern. So we can't base any of our decisions off that. Okay? So again, I just wanted to point out that it's not a head and shoulders good pattern there. Now it doesn't mean we're not going to drop down, and that's important to realize. And let me take that line away. It doesn't mean that we're not going to fall down, because I do foresee that happening, okay? I really definitely do foresee that happening, that we're in January. I don't think we're going to have a big drop till January, but at some point in January, we're going to have a drop in this market that's going to take us all the way down through this low here in November, probably back to March's lows. All right, if you remember way back in March of 07, we went pretty low on the Nasdaq on that big sell-off based on a China sell-off that caused some panic in the United States. But in any case, that's far away at this point. We don't need to worry about that. I'm in no way saying that I'm going short this market yet. That would just be stupid going into light volume. And the other thing I want to point out, we talked about this rally happening going into Options X. Options X always expect the markets to go in the opposite way as the majority out there. Too many shorts out there, too many puts out there. The market must come up, and those puts must expire worthless, so the big money can take their profits from when they sold the puts to the average Joe. Okay? That's just plain and simple Market 101 in my book, and psychology. Better chart there, folks. All right, and here you have the S&P futures pushing back up to their 50 moving average too. But again, as I said here, you don't have a good head and shoulders pattern because this side is lower, this shoulder pattern is lower here. But again, you have resistance coming in here. So while I do think we have a chance of getting through that 50 moving average in the near term on the light volume, I do think that the market now is going to trend more like this, sideways to maybe slightly up, rather than the way it's been going, which is like that. Alright, I don't think we're going to have the same type of movements up, unless, again, this is all based on no new news. Should they announce that they're bailing out every homeowner in the United States, then maybe we rally big. Or should Goldman Sachs come out and say they're taking a bazillion-dollar write-down or some other weird thing, should that happen, well, then maybe we also see the markets drop hard. But according to the fact that I just don't think that's going to happen based on bonuses are coming out, you don't want to have the year-end on a bad note. Generally, you're going to have a sideways to positive market. All right, so look over a few odds and ends. Overall, the market was very light in volume. We did 1.192 million contracts today. That's very light. Monday is going to be even lighter, folks. Be aware of that, and please be aware that trading-wise, it's going to be very tricky next week because of the light volume. Okay. Also, what I want to point out is a few other things on some key stocks, and we can look at them here. Let's look at Research in Motion today. Research in Motion, tremendous move up here. Although it did gap up the highest it was all day, it did close off those lows. But what I want to point out here is you have a possible double top coming into play here on it right here, and we may see that. Should that get through that area right here, it could actually go up to this area here on Research in Motion. So again, research in motion, tremendous day today, up $11.64 to 118.63 on great earnings yesterday. Once we get into January, also more earnings are going to be coming out, so we need to be aware of that as well. Be ready for that and get ready to rock and roll with those earnings. All right, folks. Other than that, that's about it. Have a wonderful weekend. There'll be a video on Monday. It's going to be a short video, obviously, because it's a shortened day. There won't be as much to talk about. No video Tuesday since the markets are closed, and we'll get back to the normal videos on Wednesday. But thank you all for watching. Have a wonderful Christmas if I don't talk to you before, and a great holiday. Take care.